Hello again. Welcome to the Alpha Wave Trader week ahead. In this week's version, I'm not going to stick my neck out at all because the market where it is right now is right on the cusp of either breaking out and really rocketing higher, or the music could just stop. Are there sellers right at this high yet again? I mean, this has been 18 months now of trading in this range. A lot of work done, and there's been a lot going on. We've got the news that, US-China trade talks are back on, but look, there's nothing really happened there. There's been no concessions. It's still going to drag on. But all the world's central bankers want markets to go up and not down, and they're all backing off and cutting rates. So that may be enough to finish this consolidation period off. And you can see what's happened in the past consolidation periods before, breaking out and having another leg higher. And, well, the market could be on the verge of that. But the one thing I wanted to do today, because I do like to leave you with something, a bit of something to think about from a technical perspective, or some concrete ideas of, what the market's going to do. And because this situation is sort of so explosive, I really see it as a 50-50 on, a real blast off, or gravity taking over, and we see a quick move back to 2650. It really is much of a muchness right here. You can't say too much. So I wanted to just show you something that I use to help me in deciding market direction, because it's a very difficult thing. It's not as simple as you think when people talk about moving averages and crossovers and saying whether it's trending up or down. The complexity of price action is just so intense that whatever you use is going to end up having problems and having periods of indecision where you have confusion. So you do end up having to have something to give you a sense of how you describe direction. And so I just wanted to give you today something that I use which may be helpful for you. And what I want you to look at is on this chart, which is the S&P 500. I've got the Bollinger Bands, you can see. We've got the blue line there, and this is a weekly chart. And so that's just a 20-week simple moving average. And so that's just giving me a good sense of the average price. And I see that as a fulcrum in the market. That 20 period is just so important. But beyond using just a moving average crossover, which you'll see is very difficult. I've got a 10-period exponential there. And, if you go into the nitty-gritty, those moving averages, yes, they cross, but they crisscross over and over again. And, it's very difficult to know one way or the other at the point of crossover to say, oh, now it's trending up, now it's trending down. So how I look at things is I use these Bollinger Bands, and you'll see I've got the two white ones, which would be the 1 standard deviation and 2 standard deviation Bollinger Band. So that's where most price action is going to be within those Bollinger Bands. And then I've got the 3 standard deviation Bollinger Band, and that's that dark brown one there. And all I'm going to show you today, very quickly, just to give you a sense of how I use them, is if you see how you've got prices selling off through here, what I'm watching is the lowest price on that 3 standard deviation Bollinger Band above the moving average when it's going down. And that lowest price you can see is there. So once prices crack above that level, I'll then start looking at the highest price of the 3 standard deviation Bollinger Band below the moving average. You can see through there. And I'll need weekly close below that level to give me the sense that direction of prices is changing. But the interesting thing about this is where the good opportunities are, if the market is trending up, is looking at that 1 to 2 standard deviation below, so that area there, and looking for the buy pivots out of that area. And you'll see over and over again, and in this instance, there's no close below that 3 standard deviation below. So, we haven't got the sign that prices are turning down. But you can see here, prices do close below that highest level of the 3 standard deviation Bollinger Band below the prices. So once you've got that confirmation, I'm then looking at the area 1 to 2 standard deviation above the Bollinger Band as the spot where you might get a shorting opportunity within the downtrend. So then, just to follow on, I just want to make this point. This is just a little lesson for you, because I've got no idea what the market's going to do right here, whether it's going to bust out or collapse. Really, you just have no idea. So, looking again at this little example for you of analysing whether prices are going up or down. Once we've got this confirmation of prices closing below that level, 3 standard deviations below the highest level of that indicator, I then need prices to close above the lowest level of the 3 standard deviations above. So you can see there, that's the point there. And until we get that closing above that point, I'm still looking at this as potentially going down, and I'm looking for opportunities in that 1 to 2 standard deviation above, looking for reversals. You can see there of prices selling off, selling off, selling off. Then we get the close above that 3 standard deviations above Bollinger Band, and off it goes again to the upside, in which case you're looking at that area 1 to 2 standard deviations below as opportunities to join the trend. And then you need the close below. Now, see, we're following along that 3 standard deviations below. What's the highest level that gets to? And that gets to that there. So you need the close below there to say, okay, we might be trending down now. And you can see we got that at the end of last year. And this is where it's interesting right now, if you've followed along what I've been saying about deciding whether it's trending up or down. You can see now that we have the confirmation that it might be going down, I need to see a close above, weekly close above the lowest level of that 3 standard deviation Bollinger Band above that moving average. And you can see that we haven't actually done it yet. We are really on the cusp. So if I get a weekly close above the area pretty much where we are right now, which is around 2980 odd, then there is a shift for me in the trend. But until then, it actually hasn't shifted yet. So this is where I can still see prices creating a weekly sell pivot and plummeting based on a very concrete set of rules on what decides whether a market is trending up or down. And so until we get that, and we may get it this week, if we get a strong close above that level, it'll look like this whole period of consolidation may be over. And, well, the way things are looking and the way the central bankers want to keep lowering rates, we may very well be off to the races again in a big way. But we are not there yet. And that's why I just wanted to do this whole lesson to hopefully give you something that you can use in your own trading, but also to make the point that it really is on the cusp now, and we haven't yet had the confirmation that things are really turning back up since we had that big sell-off at the end of last year. All right, well, I'll come back with more next week. Cheers.